All right, what is up, tycoons? What's up, traders? Super excited for today's video. We're going to come at you guys with an update on ALI, ticker symbol ALI. This is the Alethea Artificial Liquid Intelligence token. Now, if you missed my last video, you missed the key levels and some of the key signals of why this popular AI crypto token is dropping right now. And when it comes to technical analysis, there's a few indicators. I'm actually going to go over those with you guys so that you guys can learn something new, hopefully, in this video and, help to try to give yourself an edge in the market. Okay, trading is like going to battle. It's like going to war. You need to have the proper weapons and you need to know how to use those weapons. So that way you can increase your odds of success on the battlefield. So with that being said, smash the like button, subscribe to the channel if you guys are new. And remember, none of this video is financial advice, really just trying to give you guys some good education on some of the different strategies, chart patterns, indicators that you guys can use to help give you an edge. So there's a few things on here. Most notably, we had this head and shoulders pattern and we broke our neckline right here. Okay, so we had this trend line that we touched 2 times here, 3 times here, twice over here, and you can see finally we broke down, came up, tried to retest it, and we pushed lower, and we essentially have hit the targets for the head and shoulders pattern. Okay, we had the left shoulder over here, we had our head, and then we had our right shoulder. Now on top of that, we also had a double top pattern right here, indicated by these 2 arrows. All right, we had these 2 lines right here, strong resistance at 0.0719. And I went over some of this stuff in the last video. So, just make sure to subscribe so you guys can get constant updates. I do these viewer requests every single week too. So if you want to see your token or crypto on the next one, all you got to do is comment down below. So we had the double top. And even before the double top, we actually had something known as bearish divergence, which you may have heard of this before. And if you haven't, I'll explain it to you guys very simply, really quickly. So essentially what you're looking at, all right, is notice how we have a high right here. Okay, so we have a high and then we have a higher high over here. So the token is clearly going up in price. But if you take a look at your relative strength index, the RSI, this is going to measure the relative strength of a token at its given price levels. And we can see that we have these highs right here. And then we actually come here and we make a lower high. So while the token was in an uptrend, all right, going up in price, it was actually losing relative strength in a downtrend on the RSI. That is a term known as bearish divergence and indicates you could see some type of bearish activity. Now, since then, we've had a pretty sharp drop. Okay. And we had our major levels right here. And as you can see, it says we're bearish below this level right here, which was 0.0466. Now, what these are is these are the 3 most common and well-respected Fibonacci retracement levels. You have the 38.2, the 50%, and the 61.8% level. And the reason we use these, all right, is to help identify trend continuation versus trend reversals, because nothing moves in a straight line up or in a straight line down. Rather, you get a move up, retracement, continuation of the trend, move down, retracement, continuation of the trend. Or you can also spot trend reversals, right? And so a reversal would be a move up, retracement, and then you consolidate and break through those retracement levels. And that's how you could spot a potential downside reversal. So we had our big move up since the beginning of the year from January. And then we came down and consolidated at our major retracement levels. Okay. And you can see that we actually just broke through our major retracement level. We're heading down towards 0.028653. That's our next major support level, but we do have a little bit of a demand zone right in between here that we're testing out right now. It's going to be interesting to see what happens. Maybe we find support in this demand zone and we try to push back up higher. But ultimately, if we break below this 0.028653, most likely we're going to retest some of our previous lows. Now, that doesn't mean we have to, okay? This is definitely a valid area of demand where we consolidated and buyers and demand was able to step in and push price up higher. So that may repeat itself again. So just be on a close lookout. Just wanted to give you guys an update in case you missed the last video on why this token has been dropping. As you can see, we're on the daily time frame here, and the past like 5 or 6 days have all been red. And really, it happened once we broke that major support level where I said we were going to be bearish below there. So that's it for today's video. Smash that like button, subscribe to the channel if you guys are new. Remember, if you enjoyed this and you want to see your token or crypto in the next one, all you got to do is comment down below. I'll get to it as soon as I can.